What's up, guys? William Ryan here, back with another video. And in this video, I'm going to be going over the market structure shift. Okay, so there's a lot of misunderstanding about the market structure shift, in my opinion. And you see a lot of times it's not just a break of a swing low or a break of a swing high after a stop run. Okay, that is not always the case. And so in this video, I'm just going to be going over what I deem to be the market structure shift and how I qualify when a market is going to be moving bearishly or bullishly. Okay, when the order flow is going to change. Okay, and when we're going to get our best profitable and our optimal advance setup. And with that being said, guys, let's get right into it. So we all know that a market structure shift, right, is a swing high, okay, right, preceded by a swing low taken out. Okay, so this here would be deemed a market structure shift. Okay, but the only way for me, for a market structure shift to be valid, okay, is that if it's breaking balance price ranges or creating balance price ranges. So if we take out this high here, as we can see, right, you have this swing high and then we get this swing low taken. Okay, price comes back up to that balance price range into the fair value gap, and then we proceed to sell off. Okay, so this becomes a valid market structure shift, right? And then we can anticipate price to continue lower. So we have another valid market structure shift here. So we have a break of the swing low here, okay, with a balanced price range. So for a market structure shift, okay, there needs to be two things. Okay, the first one is a break of a swing low, in this case, after a buy-side liquidity raid. Okay, so this is the first thing. The second thing is a balanced price range or a fair value gap needs to become inverted. So these two things, right, are what we're going to want to be looking for, okay, when looking for market structure shifts. Okay, and this is also going to confirm order flow to us, right? It's very, very significant and has a lot of power, okay, that gives us real-time support and resistance. I can't stress enough how important this is, especially if you're following my YouTube channel and actually using my trading plan, the Optimal Advanced Trading Plan. This is going to be essential. Okay, you're absolutely going to need to understand this, to practice this, and to get your eye fixated on the balanced price range. It's easy to see a swing high taken and a swing low taken, right? But it's another thing that you must see the balanced price range form. The balanced price range, to me, is more important than the market structure shift, the highs and lows getting taken out. Okay, and why do I say that? Because in my opinion, the balanced price range, is the most powerful ICT tool out there. Okay, that's when we're just talking strictly about price action. Okay, I know central bank dealers range and Asia range and flout are all very, very strong and powerful methods to capture highs and lows of the day. But again, I'm not out here trying to capture highs and lows of the day. We're here to be profitable. We're not here to be perfect. Okay, and so this is one of the major tools that you are going to use for your support and your resistance and qualifying market structure shifts in the market. And so now that we have this principle, okay, that a market structure shift is not just a break of a low, but it's also a fair value gap becoming a balanced price range. Okay. Now that we have this principle in place, okay, this is another piece of the puzzle that is going to make it easier to locate our optimal advanced setup. So I'm just going to get these out of the way. And we're going to go over the optimal advanced setup. Right? So I know you guys can't see OBS, but this right here, I'm just going to move this arrow, guys. You guys can see the market structure shift. This is our setup right here. Optimal trade entry, okay, with the Williams percent R SMT divergence. And so we have time. Okay, what time does this come in at? This comes in at 3 a.m. This high right here. Okay, this high right here comes in at 3 a.m. So that's one of the times that we look for. It's within the London kill zone. And we know that highs and lows of the day are going to form at these times. Okay, so time is covered. And then 2, we have price. Okay, and the price I really like in here, it's within the balanced price range. Okay, is that 350 level. So you have 2073.50. So the 35. I really like that level. That's the level that I would try and get in short at. And so we have our price characteristic in there, okay, that we are looking for. Very, very nice. So we have our time, our price, and we also have our repeating fractal. Which is our market maker model, okay, accompanied by the Williams percent R. So I actually took this short and captured a 1-to-1, right? Only because I don't like holding over weekends. That's not my thing. And my plan actually does not permit me to do so. So that's why I did not hold it over the weekend. I closed it right before market close on Friday. And so we have the market structure shift here, right? Price comes down, we create a low. Price rallies up, we create a high at 3 a.m. in London session on Friday. Okay, expecting this order block in this balanced price range to hold price and to give us some form of resistance, quote unquote. You guys can also see that the midpoint of this balanced price range really gives us that nice entry. Very, very beautiful. You guys want to be marking the discount, premium, and equilibrium levels of these fair value gaps and balanced price ranges because they are very, very sensitive and they're very, very important. So price comes up into that optimal trade entry, quote unquote, optimal advanced setup, and we begin to sell off. Okay. Yes, gold is very, very bullish right now, and I wouldn't be surprised if it continues to be bullish, but we began a market maker sell model, right, with all the things that we talked about before. Okay, so I went in here short. I didn't get the complete high. I got in on this candle here. Okay, we have sell side liquidity resting here below this low, and we also have sell side residing below these equal lows over here. So I was just targeting a 2-to-1 setup, and the best that I got was a 1-to-1, and that's completely okay with me. It's a winning trade, it's a profitable trade, and we're after profitability and not perfection. So now I want to dive a little bit into the pricing element, okay, and the pip ranges, okay. So when we have a swing low to a swing high, we're going to take the range in regards to pips, and we're going to want to see 20 pips, 35 pips, 50 pips, 65, 80, 100, and so on and so forth. And so we're just going to go in here and look at the sell side of the curve because that's the price action that we've been getting, and that's what we were expecting. And so we'll just start off with this swing high down to this swing low. So we have 165 pips, give or take, from the high to the low. Okay, from the rate on liquidity to the liquidity purge down to the fair value gap here, the low of the fair value gap, 165 pips. Okay, that's one of the numbers that we look for a range to form. The swing low to this swing high up here, okay, roughly 80 to 100 pips. If we're going to take the complete low to the high, it's 100 pips pretty much to the pip. Okay, so that's one of the numbers that we look for when a range is going to be created. Okay, from the high to the low down here, we're just shy of 165 pips. 165 pips. 165 pips. Okay, from this swing low to this swing high, you have 100 pips. From this swing high to this swing low, okay, roughly 150 pips. Okay, so you can clearly see that these levels, okay, and these numbers are very, very significant in the marketplace, and we need to be aware of them and we need to implement them. It's very, very important, right? Because if we can start formulating the structure of these market maker models in our head before they happen, okay, we can get in and out of these positions with greater precision, right? So say price came down here and I saw price retracing back up into this area, and I saw that there's 100 pip retracement back to the consequent encroachment of this balanced price range. I'm going to want to get in closer to that 100 pip retracement. So either getting in at 95 pips, 98 pips, okay, or even 90 pips. You're going to want to use these ranges, okay, for your entries and your exits. So let's say if you're getting in here and it's 100 pip retracement and your stop loss is 65 pips, wink, wink. Okay, your stop loss is 65 pips. We're going to want to be targeting minimum 120 pips to 135 pips. And what do we get? We got 150 pips. Okay, but all you need here for that 2-to-1 setup, if you do get this nice entry here, okay, if you get this consequent encroachment of the balanced price range, you're going to be risking, personally, I would be actually risking 50 pips, so above this order block. Okay, I would be looking for 100 pips for a 2-to-1, and that's just below this low. And that's all you guys need. We don't need anything else. Get your 2-to-1. Okay, get your piece of flesh. Take your bite of the marketplace and then get out and move on. Okay, so this was a very, very beautiful market maker sell model on gold. And for me personally, I would love to see gold take out these equal lows down here. And that is what I am expecting. So we'll see if we get anything on the lower time frame that will give us a 2-to-1 setup, kind of moving towards these equal lows. So now I'm going to go over to TradingView, and I'm going to show you guys my executions. Okay, so you can see my executions here. But so with that optimal advance setup, I went short twice in here. Okay, one of them was based off the hourly chart, and the other setup was based off of, I believe it was a minute chart. And you guys can see that on my YouTube. That's my latest video. So we can also, right, very, very important, use these higher time frame setups, optimal advanced setups, and then we can go down into the micro. So we see a high that gets created at 3 a.m. with the optimal advance setup. I'm going to be looking for optimal advance on a lower time frame, either a 5-minute, 3-minute, 1-minute, 30-second chart. Right? And this is how we can pyramid, and I'm not going to be teaching that for a little bit. I don't think it's needed right now. I mean, we can get into it eventually, but we don't need it right at this moment. So actually, I believe it was on a 30-second chart. Let me try and find it here. Yeah, so my short, guys, on the YouTube channel, you guys will see it. I'll just pop it up quick. Okay, it was right in here. Okay, so we had the William percent R 3 times actually. It was accumulating in this balanced price range, and then price eventually sold off, and I got my 2-to-1. Okay, within the higher time frame setup that I was in. Very, very nice. Very, very nice trades. All right, guys, with that being said, I believe that's going to be it for this video. And until next time, guys, good luck, good trading, and we will see you in 2024. Take care.